All right. Good afternoon, everyone. My name is Elizabeth Roldan. I'm here joined by my colleague Anthony Liberto, and we are from 360 Advantage Advisors. And this is the program introduction and enrollment information for the new 360 Advantage program that is being rolled out to all full-time benefit-eligible employees at Bellmark. The 360 Advantage program is a preventative care management program that provides employees relevant health information via text messaging. The employees, this is part of the wellness compliance that is part of the program's compliance, that employees will get weekly text messaged information about keeping their health top of mind. The messaging is very short and simple with information like click here to view healthy recipes, click here to look into more healthy lifestyle. So the idea behind that is to keep health top of mind. As a result of employees being enrolled in this, they are able to utilize a portion of their already contributed federal payroll taxes to receive a benefits package that they can go ahead and enroll themselves and or their family that is fully funded and paid for by those tax savings with no decrease to the employee's take-home or net pay. The program does not impact any of your existing health insurance plans offered by Bellmark. It's completely separate standalone offering from those health benefits. And at a minimum, employees would have to complete one survey that is sent to them in order to be in compliance with the program. I can tell you that the survey is very simple. It's what health information would you like to receive text messaging about? And would you like to receive it via text messaging or via email? And that's it. And that's the only compliance or requirement that an employee has to do once a year. Through this program, all the coverages are guaranteed issue for not only the employee, but also for their spouse and or dependent children. There is no medical underwriting or physicals or anything like that required, especially for a policy, for example, like the whole life insurance. Because of Bellmark's group's size, everything is guaranteed issue, and we're not even going to ask if the employee smokes or uses tobacco products. The benefits are all offered through Allstate and Delta for the employees that are enrolled in the program. And again, the benefits that are being offered are at no net pay change to the employees as they are enrolled in the program. Every employee is going to have a specific budget of monies allocated towards them because it is dependent on their payroll information, any pre-tax withholdings that they have, whether they are married, single, and any other situations that they have with their specific federal payroll tax contributions. That is how the budget for everyone gets calculated. So some of the employees that we've connected with so far, I know that we have been able to give them what their benefits budget is, and with that benefits budget, what they can go ahead and afford. Every employee, because they have a slightly different budget, again, based on their payroll and other factors, will have a slightly different package of benefits that's completely allocated for them and or their family, should they choose to enroll a spouse and or dependent children. Through the 360 program, there are 7 options that are being offered, and we're going to go through each of them in detail, but just quickly to highlight them, it is dental and vision offered through Delta, and then offered through Allstate, accident, whole life insurance, a hospital insurance plan, the critical illness insurance plan, and the identity theft protection. Employees have the choice to pick from any of these 7 plan offerings. For most employees, they're going to be able to get 3 to 4 plan options just based on the budgets and what we've reviewed so far with all of the employees and the information that we have loaded in our enrollment system. But it is completely up to the employee what benefits they want to enroll in. We have employees that have reached out and said, you know what, please take my entire budget and I want to put it into as much life insurance as I can get. So again, very dependent on the employee, what they want to enroll in. And every year, employees will have an open enrollment opportunity to go ahead and review their coverages and either keep everything the same or make changes at that time during open enrollment. So the first plan option that we have is the Delta Vision Plan. It is a very benefit-rich vision plan, more so than other vision plans, because it offers not only a routine eye exam annually, but a $200 allowance towards contacts and a $200 allowance towards frames, both in the same calendar year. That is a very benefit-rich option because usually we don't see these limits as high, and also with other vision plans, they tend to limit the employee to elect between either frames or contacts, not both. So, for example, an employee that chooses to enroll not only themselves but their family, each member of their family that they're enrolling would have their own $200 allowance towards frames and $200 allowance towards contacts, both in the same calendar year. The vision plan, you would get an ID card mailed to you in anticipation of the plan's live date, and you would be able to go ahead and present that at your optical location at your vision provider, your ophthalmologist, I should say. So you'll have that in anticipation of the plan being live. And the coverage is not only for vision, but for all of the other plans begin on February 1st. So there's no delay or blackout or waiting period because the coverages begin right away, the moment that they're effective. The next plan option is the Delta Dental plan. Within the plans, you have two options that both cover the same amount for preventative, 100%, for basic work, which is a simple tooth extraction or a filling, covered at 80%, and major work covered at 50%. That includes bridge work, dentures, and crowns. Under Plan 1, your calendar max would be $1,500 per year, and under Plan 2, it would be $2,500 per year. What we see with employees, they usually gravitate towards Plan 2 because not only does it have a larger calendar max, but it also offers an orthodontic max of $2,000, and it also includes coverage for dental implants. Dental implants, I can tell you, is a very unique benefit that not many dental plans actually include that. So under Plan 2, that is a great option that employees can go ahead and opt into to receive that coverage should they need it, but also for the additional $2,000 towards ortho work. With not only the dental plan, but all of the other plans, your dependent children can stay on your plan until the end of the year in which they turn 26. I know usually with dental, dependents age out either at the age of 19 or if they're a full-time college student at the end of the year in which they turn 23. But irregardless of their student status, all of your dependent children can stay on any of your coverages until the end of the year in which they turn 26. So what we see is employees whose children may have aged out of dental, they can now come back on until they age out at 26. So again, a very benefit-rich option for all of our coverage, but dental plan 2, I can tell you that is our more popular option just because of the larger benefits that it has. And again, please feel free to submit your questions via the chat feature. For those of you that are in the conference rooms viewing the webinar, please feel free to unmute yourself or if you're dialing in, so we can go ahead and answer your questions in real time or at the end during Q&A. So the next plan and the next 5 plans really are all offered through Allstate, beginning with the accident plan, which is truly Allstate's #1 plan. It is its most enrolled and utilized plan because everyone, no matter of the type of work that they do or the type of lifestyle that they have, has some type of potential at some point for an injury, whether it's a slip and fall, a sports injury, a car accident, any external trauma to your body is legally defined as an accident. And with the accident plan, something as simple as a slip and fall, for example, would pay out a $400 cash payout under Plan 2. So it is a very benefit-rich item that in the brochures that were emailed and that we have on Bellmark's website, you can see the entire schedule of potential injuries that will cover you anything from a broken tooth all the way to a death benefit if, God forbid, with a traumatic brain injury or an accident or anything like that. It is a very comprehensive plan through Allstate. And I can tell you we've had a lot of employees that have enrolled in this because, again, it is Allstate's #1 plan. But we had somebody recently who it was a middle school nurse at a school that we have this program through. And her child fell and broke his leg at one of those jumping places, and he didn't land right. And for his broken leg, she received $3,600 that was paid out directly to her. Your major medical at Bellmark, or if you have it, let's say through a spouse, is most likely covering your injury or your medical at 100%. But with the accident plan and any of the other coverages, they are paying you as the employee out directly. So even if your major medical is covering your injury 100%, you can file a claim after you've been treated for your injury. And with Allstate, they will ask you if you want to be paid via a check or via a direct deposit for the injury that you sustained. Claims are very straightforward and simple to file on Allstate's member portal where they're going to ask you when you were injured, where you were injured, where were you treated, and then documentation, let's say from urgent care or the hospital, to corroborate that you sustained the injury, and they will go ahead and pay out your claim 3 to 7 business days. That's part of the reason why we went with Allstate versus Aflac or some of the other carriers that offer voluntary benefits, because Allstate pays out their claims pretty quickly. Also with the accident plan, I would be remiss if I didn't mention that you don't necessarily have to get injured to make some money with the accident plan. It offers two $50 wellness incentives per year that you can go ahead and file for things like getting a physical, getting a dental cleaning, or a vision checkup. And theoretically, a family of 4 can make $400 a year just for putting in their preventative wellness claims that they're already doing anyway, for the most part. So I would highly encourage you, if you have children that are in sports, or if you yourself are in a position at Belmark that you're in an active position, or if you lead an active lifestyle, the accident plan is a great option for employees to take part of. The next plan that we have is the whole life insurance, which I do like to take the time to mention that it is different from term life, whereas whole life is actually building cash value in the background while the policy is in effect. And what's great about the whole life policy through Allstate as well is that it offers the ability for it to be converted into long-term care. So if you know anything about long-term care, it's something that's not covered through major medical, nor through Medicare. It's only covered if you meet certain income criteria under Medicaid. But with the whole life policy, employees can choose up to $150,000 worth of life insurance for themselves, up to $75,000 for their spouse, and up to $20,000 for their children. With the whole life policy, like I said, you can convert that face value into care for a long-term care facility, if God forbid that should be a situation for you. But also, the whole life policy, as well as any other of the policies that we're mentioning today, they're all completely portable. So if you leave employment at Belmark, or if you retire, you can take the policies with you, or you can terminate them at the time that you leave employment. And with the whole life insurance policy, any cash value that you've accrued up to that point, should you choose to terminate the policy, would be paid out to you. What's great also is that once the policies are issued, the rates are locked in at the time of issue. So even as you are aging, your whole life policy, for example, would continue to be rated at that original issue date. So that's an important distinction that we like to make with the whole life policy as well. Okay. The next plan that's available is the hospital plan. The hospital plan is just that. It covers and it pays you out for the days that you are hospitalized, whether it's due to an illness or due to an injury. On Plan 2, for example, you would be paid out $800 on the first night that you're hospitalized, and then $100 per day up to 31 days that you're hospitalized. And you can have multiple hospitalizations throughout the year that you can continually file claims for. We see the hospital plan as a very popular option for employees that are pregnant, or they have a spouse that's pregnant, or that are looking to get pregnant, because it would pay them out for the days that they are hospitalized for labor and delivery. But also, if you have a chronic illness that you are hospitalized during certain times of the year for that, obviously you're using the hospital plan, so that would be a great benefit to have. Or if you have an upcoming surgery that you know that you're going to be hospitalized for a minimum of 24 hours, it's a great option to have as well. I'm not sure if your plans at Belmark have a deductible, for example, but with some of our other clients that offer a deductible towards their hospital, this is great to bridge that gap, because it would pay you out directly, and you can use that money to pay towards a deductible that you may have. So another great reason to really think about the hospital plan if that's a situation applicable to you. The next plan is the Identity Theft Protection Plan. So it is a monitoring service of your name, social security, and date of birth on the dark web. It offers up to $1 million worth of coverage to recoup your identity, and within that, up to $500,000 towards the recuperation of stolen funds. So if anyone goes ahead and, let's say, racks up a bunch of debt in your name, or somehow withdraws money from your bank account, you can use the identity theft plan to go ahead and file a claim to recoup your losses, for example, on stolen funds, up to $500,000. And the last plan that's offered is the critical illness plan. If you're familiar at all with Aflac's cancer policy, this is all states' version, but definitely more comprehensive as it covers not only cancer, but heart attack, stroke, major organ failure, paralysis, loss of a limb, loss of hearing, loss of vision. And an employee can choose to pick from a lump sum of either 10, 20, or $30,000 to go ahead and be paid out upon the diagnosis of that policy. I can tell you that we've had multiple employees, unfortunately, in the 4 years that we've had this program that have been diagnosed with cancer specifically, I can tell you, that have been paid out pretty large payouts with this. We had an employee just recently that she was diagnosed with leukemia. She was paid out $20,000 for that diagnosis. And for her and her family, that went an extremely long way because she was out of work for a while during that cancer treatment. So again, not only under the critical illness policy, but under any of the other policies, claim monies are paid out directly to you, and it is at your discretion how you want to utilize those funds. The critical illness policy also offers a wellness incentive. The accident plan offers two. The critical illness offers one incentive per year per person that's enrolled for $50. Again, for anything preventative like dental cleaning, a vision checkup, even something like a preventative mammography would be something that could be filed for a wellness claim under the critical illness policy. So one of the other questions that we've been getting a lot is how this actually looks on an employee's paycheck and how the program works. So the way that the program works, and we have this example on the website as well, the Bellmark website for 360, is an employee's taxable income. So right now, in every paycheck, you're contributing towards federal, FICA, and Medicare dollars. So on your check, you will see that in January, for example, you'll be paying a certain amount for those three federal contributions. But once you're enrolled in February, you will see that those contributions are lowered slightly. Because you are contributing less money on those three federal contributions, that is what generates your specific benefits budget that is covering the cost of the plans that you are enrolled in. So the most important takeaway for employees once they see their paycheck come February is that their net pay is not going to be decreased because of their enrollment, because the cost of their policies are fully funded by these tax savings, since their federal payroll contributions will be lowered enough to cover that cost. So that's something that we like to take the opportunity as we're explaining the program to just review with employees so they understand that their pay stub is going to look slightly different, but at the end of the day, their net take-home pay that's directly deposited into their account will not be decreased as a result of them being enrolled in this program. We also not only do an underwriting phase before enrollment starts, we also do payroll testing before the program goes live, again, to ensure that no one's check goes down, because that's part of the compliance, and we want to make sure that everything is covered through these tax savings with no impact to the employee's take-home pay. So as I mentioned, the amount of policies and or your budget is dependent on your payroll information as well as your age. So for example, people that are younger will be able to afford more life insurance as they are rated age-based on whole life and critical illness. But what we highly encourage you is to reach out to our enrollment team by making an appointment. You can call our office or you can send us an email, whatever is more convenient for you. You can go ahead and visit bellmark360.com, and all of the brochures for all of the plans that we've gone over today are loaded there. We'll post a recording of this webinar on there as well later on today, and we'll share that link with Herb and Scott. But we highly encourage you to reach out to our team, learn more about what plans you can be enrolled in. And if you are looking to add a spouse and or dependent children, definitely reach out to our team to go ahead and do that. For those employees that don't want to get the benefits package that's funded through tax savings, they can certainly opt out by either calling or emailing our team with the information that's displayed on the screen. But if you're okay with the pre-elections that we've made for you, that is what's going to be enrolled and processed. And on February 1st, you will receive a welcome email with information of how to access your policies online. And for those of you that enroll in dental and vision, you will have ID cards mailed in anticipation of that as well. With that said, that really does bring us to the end of our presentation. I will open it up to Q&A for anyone who wants to unmute themselves or submit something through the chat. Scott and Herb, is there anything else that you'd like to add?
No, oh, go ahead, Scott.
No, go ahead, Irv. You're good.
No, I would just like to let everybody know if you have questions, because I know there was a lot of thought and, questions concerning the plan. This is the time if you're not understanding or you didn't understand to ask the questions, because at the end of the day, the question that's not asked is the wrong question to ask. So feel free. They are here to try to give you the best information as possible, to help you make a decision that's, one way or the other going to benefit you. So feel free to ask the questions, no matter what the question is, if it's concerning deeper dive into how they get the uh, current payroll versus what the payroll, just to go through the dynamics and the steps beyond that, if you're unsure, to make sure that, that you get a good idea. So I leave the floor open to everybody to, you know, ask questions.
Jesse?
Where can I see the, like, this is a government program. Like, could I
Yes.
see, like, from the government website where this is available? So it's not just, you're saying you're pulling it from that way, so I don't have to pay it back, It's like, I feel like it's, like you're pulling from that somewhere.
Right, where's the money going? What's that gonna do at the end of the day with if they're taking less taxes off, is it gonna hurt you when it comes
At the
down
end
to
of the year.
retirement?
No,
or at the end of
because
the-
you're paying for the insurance first, your pre-tax deductions are higher, so you're paying less in taxes, and those savings are what make your paycheck stay the same.
Elizabeth, do you have
Yes.
something you can share for that?
Absolutely. So we can certainly share it. The program is compliant under ACA and IRS guidelines. We can certainly provide that specific tax code and ACA provision that makes the program compliant. One of the questions that we get all the time is, why can't I use the money to go ahead and have it come back as passive income? Because the plan's compliance is based on the federal government incentivizing employees to go ahead and be overinsured, so there is less dependency on federal programs. But we'll certainly provide that language, Herb and Scott, you'll get that after the webinar, so you have it. But to the other question about what happens when you go to file your taxes, I can tell you that this is actually an enhancement, because the part of the program's functionality is that it lowers your taxable income. So when you go ahead and, let's say, file in next January, that you'll be in the program for 8 months, you'll go ahead and see that already reflected on your W-2. And if, for example, let's say you're an employee that makes $50,000, your federal taxes will be based on $35,000. So you're going to be taxed on less money on the federal return. This has nothing to do with your state income tax. So I'm not mentioning that because it's not relevant, and it has nothing to do with the program, because we only deal with federal payroll contributions. But yes, you are going to be taxed on less money, therefore yielding a higher return, everything else being the same. If you file with your spouse and let's say that spouse is making more money this tax year versus, the year previous, that of course is going to have an impact. Any changes that you have when you go to file your income taxes every April will have a potential impact. But again, being enrolled in the 360 program, there is no you're going to be paying more in taxes, or that you're going to be taxed at that tax period. You're actually going to be taxed on less federal income.
So Jesse, when they provide that, I'll make sure you get a copy.
Another question.
Yeah.
Go for it. As of today, our pre-elections are already done, correct?
Correct.
Where can we view that information? On Bellmark360.com?
On Bellmark 360, it's 360.com is just general information about the program. To learn exactly what we've preloaded for you, that you would have to reach out to one of our enrollment team members, and you can call or email, and we'll go ahead and send you that information. I know that we wanted to make sure that everybody's elections were done a certain way. So I know that there is an order of operations with vision being the first option, dental, accident. So there's a hierarchy of how we loaded everybody to ensure that everybody would get the most amount of coverages so long as they're staying within their budget. But again, because it is open enrollment for the program, an employee can totally change that and say, you know what, I only want dental or I only want life insurance. So it is completely up to the employee what they want to make as far as changes. And the deadline for changes is next Friday, January 16th.
Real quick, I don't believe the vision policy that you shared here was on the Bellmark360.com website. At least I did not check it today, but I believe yesterday when I checked, it wasn't on there. Can you make sure that's on there so people can see that?
Absolutely, and I apologize. I'll double check that as soon as we log off and make sure that that's updated. If it wasn't, I apologize.
If I have insurance outside of here,
Yes.
do I have to still call that number and do all that?
If you are not on Bellmark's insurance, you will not automatically be enrolled.
So I don't have to,
No, but if you're covered under your wife's insurance, for example, you could still join this. That is correct, right, Elizabeth?
Yes.
I believe Herb and I talked about that before.
Yeah, as
Yeah.
long as the employee has major medical, whether it's through the company or through a spouse, that makes them eligible and compliant.
what if you have Medicaid or whatever, Medicare?
I don't believe you can then.
Right,
Yep.
that's what I thought.
Yes.
Right.
So,
Yeah, that
yeah.
was,
So Scott, I
Yep.
was going to say, if you could pass that gentleman's information along to us, because if they're on Medicaid, they are not eligible. And if they are on Medicare, they are eligible if they participate with either the company's plan in addition to Medicare or let's say a spouse's plan. But they would have to have another major medical. But if they are Medicare only,
Yep.
they're not eligible.
If you're interested, check into it and let me know.
But like me, I'm on my dad's insurance because I'm not 26 yet. Am I automatically enrolled or am I just eligible? Because I'm not on Bellmark's insurance.
You would be eligible, not automatically enrolled.
How much would the pre-tax deduction be for the full plan?
Gerard, I think you have to call in because that'll be
Yes.
specific.
Yeah, everybody's budget and how much their taxes are lowered are very specific to them because you can have two employees that have, let's say, the same salary, but if they have one contributes to the medical plan at the company and the other one doesn't, that's a difference. If one is married versus single, one has 5 dependents versus one. So there's a whole formula behind how those budgets are calculated that are very specific to you. But yes, to Herb's point, or Scott's point, I highly encourage you to reach out directly to us and we'll speak to you one-on-one about your situation.
Okay, I had an employee that couldn't join, but wanted me to clarify.
Yes,
The reimbursement, I forget what the acronym is, SIM.
self-insured medical reimbursement program, SIMRP, yep.
Yes, they were questioning if that is considered double dipping. They had found some articles online and wanted clarification on how that wouldn't be classified.
It's not classified as double dipping because, and it's funny that you should mention that because we actually did get an email from an employee who forwarded us a memorandum that they had read about a similar plan, but not this plan. So there are other plans out there that reimburse employees directly with a cash payout directly to them. What happens here with the 360 program is that there is a pre-tax code that is the same amount as that self-insured medical reimbursement code. And those two numbers cancel each other out. But the functionality of those numbers is to lower that taxable income. So the employee is contributing less on federal FICA and Medicare per pay to free up those monies to cover the cost of the plans. But there's no instance where the program is reimbursing an employee directly because what the employee is doing with that tax savings is they're purchasing additional insurance. When they have a loss, whether it's an accident under the accident plan or a hospitalization under the hospital plan, they are then filing a claim to get reimbursed for an insurance that they purchased that is paying them directly. But that is not a direct reimbursement to your point about those double dipping programs.
Yeah, but the SIM RP, I believe, that is not considered a direct reimbursement?
No, it's a self-insured medical reimbursement payout. So it's not a direct reimbursement. A direct reimbursement would have been part of their earnings. And in this case, there is a pre-tax and post-tax deduction that match up to your point about the SIM RP one. But the employee is not seeing that increasing their net pay.
Right, that seems to directly contradict the memorandum from the IRS. And I agree, a memorandum from the IRS is not law, it's not case law, it's none of that, none of those things, but it is a insight into the thinking of the IRS and the direction that they intend to go in the future. There's a lot of wording in that memorandum that seems to line up with how this plan works. So I think there's a lot of people that are very hesitant to get involved. And we've had a couple things that I think are a little bit sketchy, if you will. The way that when we try to opt out, we get a sales pitch. And we have several employees that have tried to opt out that still have been unsuccessful in achieving that or receiving their PDF that says they're opt out. Is there any feedback on that?
Well, a couple of things. So I'll touch upon the first part of that memorandum. Again, that memorandum is specific to programs that reimburse employees a cash benefit directly, which this is very different and does not do that.
There's actually some information in there about code 1 and code 3 and about how the swap-a-roo happens with pre-tax and post-tax that lines up almost exactly with your example.
Right.
I think that's what has a lot of people scared. Would you be willing to write us a letter that if we were to get audited, we would be able to turn in and you would back us on that?
Absolutely. And the legal language with the IRS and ACA code that I mentioned previously, I was going to provide. We also, beside that, indemnify. We have contracts, obviously, with your employer, with Bellmark. In that contract language, we indemnify the entire company and its employees should you sustain an audit. But again, our program has been completely vetted by ERISA lawyers that have proven
Sure.
its compliance. I can tell you that in the state of New Jersey alone, we have 11,000 employees that have been enrolled for 4 or more years in this program without any audit, tax consequences, or anything like that. But to go back to your point about the employees that are opting out, what we like to do is to make sure that an employee can certainly opt out. We are not here to go ahead and prevent that or make it more challenging or more difficult for an employee, but we want to make sure that the employee understands what it is that they're giving up. What we see a lot of the times is that employees have a knee-jerk reaction to go ahead and opt out of something that either they're not fully informed of or not comfortable with. And what we did in our response to those employees is the first sentence says, we have received your opt-out request and can certainly process it, but we just wanted to reiterate, you have a budget of X amount of dollars. With that budget specific to you, you can afford to get these coverages. And if the employee, we've had employees that have reached out and said, you know what, now that I understand that, let me think about it. I want to consider it, and have come back with additional questions. We've also had employees that have come back and said, yeah, got it. I don't want it. And for those employees, we've processed those terminations and they have those PDF confirmations sent automatically from our enrollment system, letting them know that they've been completely waived out of the program.
That's what I'm saying. I have several employees that have responded to the secondary sales pitch with, I get it, I want out, and have not received those.
They should go ahead and double check their spam folders. But again,
We checked directly before this meeting. There are about 3 or 4 in engineering alone that have not received the opt-out confirmation.
I will say a couple of things. If we don't have their correct email, if the email that was provided when we received the census data from the company is different than what they're using now, that could also be the reason. But again, an employee can call or email us in those cases, for those employees, those 6 or 7 employees that you're mentioning that have not received an opt-out for whatever reason, have them reach out to us. We will go ahead and provide it in writing just so they have that, for their own records. Absolutely. Again, our goal is to really go ahead and educate everyone on what the offering is, but it is completely up to the employee to go ahead and make a final decision. No one is being forced to do anything that they don't want to do, that they're not comfortable with. But as we talk to employees and they realize, hey, this is an amazing benefit that if I don't partake in it, it's kind of a use it or lose it, because their budgets are not going to come back to them as passive income. It'll continue to stay at the federal level, not benefiting the employee and their family. But again, that is their complete decision to make.
That was my next question, is if we opt out, we will not see the $89 fee, nor will we see the pre-tax reduction, right? Our paychecks will stay exactly as they are.
Correct. And your paycheck would also stay exactly the same should you choose to enroll. So in either
Well,
scenario,
no, hang on,
yeah.
hang on. That's not true, because one of the
Why?
negatives that did not get brought up here that I have in writing from you is the reduction in
Please.
Social Security.
Well,
I think
the
you
ret-
should cover that. That's important.
I will cover that. Anything that an employee does, whether it's through 360 or even now with your major medical, is a potential. And I say potential very emphatically because not everything that you do pre-tax will have a direct correlation to your SSI. SSI is calculated with a very complex formula of your 35 highest grossing income years. So depending on where you are in your work history, you may have an impact. We've actually had employees that we've run their entire 35-year history with the Social Security calculator on the SSI website to demonstrate to them that they are not being impacted with this. But again, anything that you do pre-tax, whether it's a 401k, FSA, your contributions to your major medical, and anything that's pre-tax may potentially have an impact to SSI, as well as when you choose to take it, whether it's at 65, 67, 70, etc. But an employee's benefits that they're achieving now, whether it's to buy additional major medical or to opt into the 360 program or to increase their 401ks, those benefits far outweigh any potential impact to Social Security. So that's a great question, and we get that a lot.
I think that's unfair to say. I think that's each individual person needs to make that assumption and not have someone tell them that that's far outweighing, because if you never take any advantage of the benefits being offered, then you're not outweighing. So I think I'd be careful saying that. I think you can say that each individual employee needs to value that benefit cost structure, and not be necessarily told that way. That was something that actually, that wording in some of the information we received back actually is quite alarming. But anyway, that's for everybody to decide for themselves.
Absolutely. That is a completely personal decision. And to go back, that you get a benefits package that you're not using. I hope no one has to use their whole life insurance, but when you get life insurance, for example, that's something that you're getting in order to protect you, like any insurance, right? It's to protect you for the unforeseen. So we've actually, out of the 11,000 employees that we have enrolled, we actually have had 2 employees that have actually passed away that we've worked with their families to go ahead and have their life insurance claims paid out that were, again, fully funded by their tax savings. But yes, to your point, there is a calculator that is amazing on the Social Security Administration's website, and you can totally run the numbers with and without 360 to determine if you will have any impact at all.
I think part of that, though, everyone will need to know their pre-tax reduction, which they will have to get from you, because that needs to be calculated during that call, correct?
Correct.
The other question I had is, you mentioned earlier that you have how many thousands of people insured in New Jersey?
Correct.
We
yes.
are all in Pennsylvania.
Right.
I assume that the licensing structure for selling insurance in Pennsylvania has been figured out and handled.
Yes. No, I say New Jersey because that's where we're based out of, but I can tell you that we have employees that are based out of Georgia, Connecticut, Rhode Island, Florida, California, Texas, and Arizona, as well as Pennsylvania. So we do have licensing across the nation. The Allstate and the Delta plans are national plans as well. So no issue on that front.
Okay, and I have one last question.
Yes.
The double dipping is one particular word for this, but there's also a word for this called circular flow, where the IRS has definitely put out there that it is 100% illegal to not receive or to receive money back post-tax that there's no valid medical expense submitted for. So do you have to submit receipts for any of the stuff that you go to do, such as dental visits or any use of this policy to get around that, to be compliant with that, or?
Not at all.
Okay, because there's actually wording in that one memorandum that says about taking a survey or a non-expense incurring action does not qualify. How do you get around that?
Because of the architecture that we have it built out as a Section 125 plan, as well as a preventative care management program, because that wellness that we talked about in the beginning, the survey, for example, that is in the receipt of that information via text messaging, that is a participatory action in a wellness program. So because that is the architecture of the 360 program, you are able to go ahead and have it structured this way. But again, in that language that I'll be providing this afternoon, you will see all of that. And again, that is not relevant to the 360 program.
Right. So, okay, I actually have one more question because with the 360 program keeps coming up and that appears like that's a separate company. So one of the things that has really confused a lot of my employees is that there is IMAC Insurance Group, which appears to be a super legit insurance coverage. Yep. That seems to be a super legit place. You have a really nice address on a golf course. That's cool. Then there's Zevo, which appears to be nothing but an HR management software.
Zevo is our enrollment system. Yep.
Right, that's cool. And then there's 360 Partners. Where are they in this whole thing?
So 360 is the actual compliance and the program administrator. We at IMAC are the insurance broker that actually handles the enrollment, the implementation of the program, and we have that exclusive agreement with the 360 Advantage team to go ahead and roll this program out. They handle the compliance, they handle payroll, and again, the actual master contract that Bellmark has is directly with 360 as the indemnifying party for the program.
Perfect. So if we opt out, is our information back to the way it was before, or is 360 still doing something with that?
We are not. No. Your information at that point is removed from our system, and that's it.
Perfect.
And I can tell you that with the 360 company, with our company, we, again, because we also manage major medical programs, right? That's besides voluntary, we do a lot of public sector major medical work for employees. I can tell you that we have a ton of HIPAA compliant security within all of our systems, as well as through our Zevo enrollment system, to your very point about how data is handled and how it's transmitted.
Right. The only reason I asked that, to be clear, is that we were a little spooked that our personal email addresses started receiving information. Now, Herb did explain that that's whatever your ADP information was, and that is fine. But it was odd that we were emailing you from our company emails and then receiving stuff back on our personal emails. It was just a little strange up front, but I think that's been handled.
Okay, perfect. And again, we want to make sure that everybody is comfortable with what's being offered. And again, it is truly voluntary if you want to have these coverages or not. No one's going to be forced to go ahead and not be able to opt out. No, it is a completely voluntary thing that employees can opt in or opt out or leave the pre-elections that we've made in the system.
Awesome. I will compile a list of the employees that have not received their emails, and I will get that up to you somehow so that we can get their stuff handled. I have one employee that's actually going to be out of office and unavailable for the next week, and he wants to make sure he is unenrolled before the timer runs out.
Got it. No problem. All right. Any other questions from anybody? Okay, well, like I said, we will wrap up this webinar now. We'll share this recording on the website with Herb and with Scott. And again, highly encourage everybody to reach out. We will answer any and all of your questions. We'll also get that legal language also sent out this afternoon as well. All right. Thank you so much for your time. And Herb and Scott, thank you so much for coordinating this so quickly with everyone. And again, anything that we can do to answer your questions, please feel free to reach out. Any method, email, phone call, or scheduling an appointment.
Thank you.
All right. Have a good weekend, everyone.
Thank you. Bye-bye.
All right. Bye-bye.